Let's be very clear about what's happening right now. This crash, this volatility, this fear, it isn't Bitcoin failing. It isn't market randomly collapsing. This is the direct impact of a policy manipulation, a broken currency system, and the decisions made behind closed doors. Once you understand how this system really works, you will stop panicking. You will start seeing the pattern. Let me break it down. Currencies don't crash down, they crash up. Fiat currencies almost never crash downwards. They crash upwards, meaning the price of everything else rises. Because the currency itself is losing value, government aim to quietly steal 2 to 5% of your purchasing power every single year. Slow enough that people don't notice. Slow enough that nobody revolts. But when inflation moves too fast, 20 to 30% in a short term, society pushes back. So policymakers try to make the collapse in small, controlled steps. You aren't supposed to feel directly. Every market you and I invest in is priced inside this controlled system. So how they control the cycle? They only have 3 levers: print money, raise or lower interest rates, and tax the economy and restrict liquidity. This is where the government shutdown matters. When the US government shut down, almost 30% of the economy instantly freezes. Benefits stop. Contractors don't get paid. Federal workers don't get paid. Government spending halts. Liquidity disappears from the system. And when liquidity disappears, every asset priced in dollars must fall because there is literally less currency circulating to value those assets. So what you're seeing now is not a mysterious crash. It's a delayed liquidity shock caused by government policy, not by Bitcoin fundamentals. And tariffs on the top of this, which pull even more money out of the economy, and assets must reprice lower. This isn't chaos, it's maths. Here's the truth they don't want you to understand. The system cannot survive without creating new currency. The debt is too large. Government obligations are too high. The economy cannot function without constant liquidity injection. So after every period of tightening, fear, shutdowns, unemployment, and weak sentiments comes the same response: stimulus, money printing, liquidity injection, lower interest rates, support programs, check, bailout, asset purchases. They give it new names, but it's always the same tool: debasement. And every time they print, scarce assets respond: gold, real estate, stocks, crypto, especially Bitcoin. Not because they become stronger, but because the currency becomes weaker. So what does all this mean for Bitcoin? Bitcoin is not crashing because it's broken. Bitcoin is repricing inside a manipulated currency cycle. Right now we are in the tightening phase. Shutdown equal frozen liquidity, tariffs equal money pulled out from the economy, and spending cuts equal less currency. Higher rates equal no oxygen for risk assets. And so yes, markets look weak, not because the assets are bad, but because the currency is being restricted. Once liquidity returns, and once printing resumes, once policy shifts, Bitcoin will do what it has always done in every expansion phase. This is not a crypto crash. This is a currency cycle. They tighten, they scare, they slow everything down, then they print, inflate, and reset the system again. When you understand this, you stop reacting emotionally and you start positioning intelligently, because they will print again. They must print again. And when they do, scarce assets will lead the recovery. Stay focused, stay rational, stay educated. We're not trading markets, we are trading the currency that values them. Thanks for watching. I'm Lamia, and I'll see you in the next one.